Mr. President, I ask unanimous consent to speak for up to 10 minutes.
Without objection, so ordered.
Mr. President, I come to the floor to discuss for a minute our economy and a pending termination or sunset of the first-time homebuyer tax credit and the potential implications and effects it certainly is going to have on what is at best a very fragile economy today. First, I want to reference this morning's USA Today business section, where they reported that existing home sales trailed down in the month of August off of the month of July. They did note they were better than August of a year ago, but still deplorably low. Of all the sales that were made in the month of August, 30% were attributable to the first-time homebuyer tax credit. Unfortunately, substantially all the rest were attributable to short sales or foreclosures. Mr. President, I was home Friday. In my state of Georgia, we have a law that says if you foreclose on a deed to secure debt or a mortgage, that you must advertise for 4 successive Fridays preceding the first Tuesday in the following month in order to foreclose. So every Friday in the legal organ of every county in Georgia, there is a section for foreclosure advertisements. I hold before the Senate today all 74 pages of the Marietta Journal legal notices announcing the foreclosure on 1,157 homes in a county of 700,000 people. Mr. President, houses continue to decline in their value because the market demand is down. These foreclosures that you see today are not subprime loans. They were the loans that were foreclosed on a year or a year and a half ago. When you read the addresses of these 1,157, which I won't do, but when you do read them, they are the addresses of mainstream America. And the mortgages that are being foreclosed on are what's called conventional loans that were made to people who had jobs, had an income sufficient to pay the payments, and had a down payment of 5, 10, or 20%. These are the good loans a year ago that today are the loans being foreclosed on. In my state, 1 out of every 13 houses is right now behind in their payments. Foreclosures are at record rates, and the first-time homebuyer tax credit is about to expire. What does that have to do with this foreclosure problem that we have and the problem of declining values of houses and shrinking equities of the American people? It has everything to do about it. You see, we got a great demonstration project in the first-time homebuyer tax credit that shows this Congress the way to continue and get a recovery in our housing market. In the time that the first-time homebuyer tax credit has been in effect, it is estimated 350,000 home sales were made. That's 357,000 sales that would not have taken place. What we need to do is look at the value of the homebuyer tax credit and see whether an extension makes sense, and if it does make sense, how it should be structured. Well, first of all, I say it makes sense because we've had modest success with the first-time credit. But I think the limitations of a first-time homebuyer and a maximum of $150,000 in income actually restrict us from helping the part of the market that's represented in these foreclosure pages. Because these are houses where people with more than $150,000 in income would need to qualify. These are what's known as the move-up homes. The homes the corporate executives and the transferees from around the country sell when they leave their home county and are transferred to a new job in another city or another state. We need to energize that market because the move-up market is where the problem exists. So I would submit that if we look at this, the sunset date of November 30th on the first-time homebuyer credit, that we should extend it. Not forever, but through mid-year next year, end of June 2010. There's a reason for that recommendation. The worst 3 months of the year in any housing market anywhere in the United States are December, January, and February because it's winter and because it's holidays. So there is not much of a market to begin with in those 3 months. If this tax credit dies in November, and then it dies the day before the declining normal market takes place. By the time the spring market comes back in March and April, it is too late. And we will have a protracted period of even poorer sales than we have had recently. But if we pass and extend the credit through June 30th of next year, we continue to buoy the housing market around the country. And if we take away the first-time homebuyer limit and raise it to any home buyer who buys a home for their principal residence and resides in it for 3 years. And we raise the income limitation from $150,000 for a family to $300,000. We stimulate the entire marketplace. Now, it has a cost to it, a score of $16 billion, and that's a lot of money. But it's less than 3% of the amount of the stimulus, and we know from what's happened in the last 9 months that it works. It is very important, Mr. President, that we stimulate and continue the existing stimulation of the housing market. The recession that began in December of 2007 began with a collapse of housing, first because of the subprime mortgage failures. But it continues today, a continuing collapse. And the failures aren't subprime, high-risk credits. They're mainstream America. There is a point in time where we owe it to our country, we owe it to our economy, we owe it to mainstream America, where we know we have a proven program that works, to extend it and buoy the marketplace. Now, I want to deal with some of the negatives that some people have about extending the tax credit. The first negative I've heard in a lot of interviews is, well, isn't all you're really doing is moving forward some sales that are going to take place anyway? Well, of course, that's the object. The problem is we don't want them to take place in 2011 and 2012. We'd like to move them forward to take place now. We want people back in the business of making decisions that it's a good time to buy a house. Secondly, people will say, well, it costs too much. Well, let's look at what we've done in 2.5 or 1.5 years in terms of cost to try and save an ailing economy. We put $85 billion in one night in AIG. That's a lot more money than $16 billion. The Treasury the Federal Reserve has at one place or another invested over $5 trillion. That's a lot more than $16 billion. The stimulus, which is a 2-year stimulus, which is just in its infancy of trying to make some difference, was $787 billion. The Troubled Asset Assistance Program, TARP, which was passed in October of last year, was $700 billion. Yet we have a proposal that's generated 350,000 sales, cost $16 billion, that's about to die, where all of those other programs in trillions of dollars have only saved a collapse, not regenerated economy. So, Mr. President, I come to the floor today to ask everybody in the Senate to think about what's happening. 6 weeks from now, the tax credit sunsets. When it fails, the market again has downward depressant on values, on sales, and most importantly, on consumer confidence. Let's try and slow down the rate of foreclosure. Let's help middle America that right now faces difficult times. Let's take them out of the newspaper, and let's take them back into a buoyant economy that has jobs, has growth, and has promise for the future. Mr. President, I would submit an extension of the first-time home buyer credit by removing the means test, raising the income limitation, and extending it to mid-year is good for America, makes good sense for this Senate, and I hope we'll find the time before the current bill sunsets to pass it and do it for America. With that, Mr. President, I yield the floor and suggest the absence of a quorum.
The clerk will call the roll.
Mr. Akaka.